Hey everybody, welcome to a new episode. This is Daniel from Stock Force One. Today we'll discuss about psychology. Everybody is discussing, in fact, psychology, but nobody's talking directly of what psychology in trading is representing. There are two types, okay, types of psychology. Psychology of the market and your own psychology of the trader, that are quite different planets or universes. Consider it how you want. What can I tell you about psychology? It's quite a lot because it's about technical psychology. It's like mechanics. You have to understand the mechanics behind the market in order to split off the psychology. First of all, let's discuss a couple of seconds about your own psychology. You need to behave, okay, when you are a trader. You got to be very, very patient and you got to be very resilient. You don't have to believe anything, not either me, okay, Daniel here that is talking. You got to test everything and don't believe the news, don't believe the bullshit when whatever they are selling you. Your main enemy is not the market, is the market maker and the brokers that are kind of brothers somewhere there. But that's it. All you need to know for yourself. What can I tell you? Don't be afraid. Just go and trade. That's it. And exercise. Regarding the market, the psychology in the market, it is split in two areas. First, the psychology for the stocks that are traded by retail traders like you and myself. And the psychology of the stocks or assets that are traded by institutions or the big guys, the hedge funds, the investment banks, or I don't know, all the other guys that have a lot of money. And I'm talking about 50 million, 100 million, 200 million, billions, trillions, and so on. Let's start with the little ones. For example, this company, News, here. This has got a small market cap, 14 million. Okay, I'm just explaining the technicality of the psychology in the market and the float of 0.10. At the same time, this has got, okay, a debt of 8 million. They need to finance this debt. At the same time, they got to pay these 38 people. Pay attention that what is very important in the analysis of a share, when we are talking about shares below 500 million market cap, is their immediate cash flow. And what is their immediate cash flow? To finance the debt and the cash flow to pay the people. That's it. Okay? So what is happening with this stock? This was close to be delisted. Why? Because on Nasdaq, generally on the stock exchange, when a share or the price of the share is spending too much time under 1, okay, this went from 18th of July to 24th of July, it went 1.02, so it was very dangerous to go under 1. Either they are making a reverse split, okay, so this is going straight up. Either they are making an offer, okay, offerings, and for the offerings you can look here, okay, this company is making offerings, blah blah. What are offerings? I told you also in another episode. They are packages of 500,000 or 1 million shares that are to be sold in the market at a special price, like here and again here. So this went straight up here and again straight up here. In order to do offerings, they are hiring a promoter, and at the same time they are investing quite a lot in news. I don't know, news equal lies. That's it. I don't care about news, especially when the market price is below 500 million. Okay, let me see you better. So what has happened? The price of this share went straight up from 1 to 5.23, okay, in 24th of July. It's quite a shake for the market, and everybody has felt that the, let's go on 5 minutes because it's much more easy to explain like this. Okay, in the first day, blah blah blah. It went from here during the pre-market and the aftermarket, and pre-market went straight up And everybody has felt here, oh, if you are a beginner, that this one can go up higher and higher and higher. Okay, so this was a lie for the general market or for the people that do not have experience. And maybe you are thinking, if it went from here to here, for sure it'll go up. Okay, psychology, they are giving you hopes. They are getting you into the market. They are calling you to the market. They are showing you, okay, something very sweet. So you enter here, hoping that the market will go again up, 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 up. But you didn't ask yourself, why is this happen? When this is happen? How much liquidity has entered here? What are the needs of the company? Why the price went up? And so on and so on. In fact, it went up in order to get you here and to get your money, and now is going down. These are the rules of an auction, and the rule of an auction is going straight to emotions, making appeal to your emotions. At the end, you'll either cry or either laugh. So you entered here and the price went down. All of this is pain. Okay, it's pain. You are screaming here. Ooh, I bought it here at 482. Maybe you bought it at 493. You are now the market bitch because they are taking your money. And in the end, the pain is becoming so great that you are starting to sell. For example, if you invested here $100 to here, I got another 10. Okay, I'm selling. So you lost 90 because this is how much the pain hurts. When the pain stopped and everybody from here sold their position, now it's time to go up again and give hope again. This is hope, this is pain. This is pain, this is hope. This is hope, this is pain. That's it. That's the whole game. If you understand this game, you understand what is happening in the market. What I want to show you also, this is very important. For example, the price for FULC, Fulcrum Therapeutics, whatever this is. Okay, it's a very dangerous company. 565 went straight up to 14. Okay, they made an offering here, offerings all over here, and the price went straight down. As you can see, despite the fact it went straight down, some of you are thinking, let's buy it because now it's very cheap and maybe the price will go up again. No, when it's about this kind of companies, okay, 500 million to 1.5 billion, this is all about pain, and the pain has been imprinted to all the people that have bought this company here. They will never buy it again, or at least for a long period of time. Why? Because this is collective memory, and collective memory now is imprinted with a lot of pain. So this is happening to companies to a max 1.5 billion. What is above 1.5 billion and above 4.5 billion in market cap, we are talking about institutional investors, as I told you, like banks or hedge fund or big funds. This will not be bought for the next period of time. As you can see, it needs at least 6 to 8 months, maybe 1 year, maybe 2 years for everything this episode to be forgotten by the retailers. Okay, the people, the small ones, okay, that invest in 100, 200, 10,000, 100,000, or that's it. And the price went straight up again. But when? Next year in March. Okay, is a similar situation here, okay, with wind. Straight up, now it's going down. So pain, hope. Hope, pain. Maximum pain. Okay, everybody has sold from here, we go straight up. This company will go up and up and up and up, but you gotta look at 30 minutes in order to understand the whole image. Please, whenever you are trading, one of the main advices is don't look in detail. Look at the whole picture, otherwise you'll not understand what this share or the price of the shares are telling you and what are their intentions. This is the most important thing whenever you are trading. Okay, this company is quite chaotic, as you can see it here. let's see in the history. Okay, they got a huge volume. It doesn't matter if the volume is red or green or whatever. It's got a lot of volume here, so this is the most important thing. Okay, I believe this will go straight up to here and maybe to here, 17. Okay, let's go to some big companies. This is 2.5 billion. What has happened here? This went straight up, down. This is also a shadow pattern that we discovered and is published on our courses, our golden courses, because they are the best in the world. On Stock Force One, we are finding the best courses in the world you could ever buy. Also explained by me and some other teachers, if will be the case. Whenever a big company like this one is going down or has been sold, we're not talking about emotions here. We're talking about reputation, because in this company, because it's so big, 2.5 billion, 59 billion, are invested some big guys, some big investment funds, some big banks, and so on. And this money are owned by some families, some very powerful people that have very powerful lawyers. And whenever they are investing money, they don't like to lose. So, whenever a company like this one, where an investment fund, where some very powerful people are invested, if a company is sold like this by another investment fund, the other investment fund is buying back its position, because at the end of the financial exercise, they need to look great. This is called windows making. Please read some stocks books that we'll probably publish also. Okay, windows making. So they will buy back their position and they will close this gap here. As you can see, this gap here has been closed. Okay, and this gap here will be soon closed. It will go a little bit down and up. If companies that is above 1.5 billion, but I would prefer to be above 4.5 billion in market cap, is going down more than 20 to 22% in the same day, it has to come back at least 50%, 50, from its down range. And again, we are talking about defending the reputation. Here the psychology is totally different. It's about, as I told you, pride, and it's an internal psychology of the people that are invested, of the people, of the institutions and investment funds that are invested into that asset. There are some exceptions. For example, when, I don't know, the CEO is leaving the company is bankrupt, or a meteorite, it's demolishing that company. Okay, these are exceptions. Okay, the company is coming straight down, but this is very rare, maybe 10% from all of the cases. So, in the big companies, we cannot find emotions. But we can talk about emotions when it's only by exception, when it's about a couple of people. These are the managers of the investment funds, but you don't know those managers, and they never hoard like the retail traders. Okay, this is also happening in Apple and Microsoft. But regarding Apple and Microsoft, there are some other things we have to talk about psychology. Apple, it's a cult company. Okay, the people are waiting outside the stores or sleeping there to buy the phones. Also, Tesla is a cult company. But Microsoft, it's a brand company, like Nike, like any other very known brand in this world. Just to understand and make some differences. Okay, when you are trading this company. When it's about cult company, you got a lot of resilience. When it's about brand companies, you got a lot of pride. Okay, so Microsoft has to defend its name. This one, it's also defended by the market. So the defense is coming from outside. From Microsoft is coming from inside. I hope you have enjoyed this episode, because I just gave you some very valuable information about technicality in psychology of the market. Don't forget to follow, to like Stock Force One. That's for you. And you'll find some very useful link below this episode. Daniel out.